What's going on, everybody? We're going to do the part two, the quarterly market trends, and that involves a drill down in the thematic portfolio. So let's get to it really quickly. So the drill down, we're looking at commodities. We go to FinViz, we go to futures, go to performance, and we can see based on the daily closing basis the performance of the 1 day, the 1 week. On the 1 week, we can see indices are behind commodities, specifically energy and metals, and then grains is coming up really closely. Some softs like lumber and sugar are starting to gain some price. If we go to the monthly, we're kind of curious about this monthly the most, and we're seeing energy as the overall strength in comparison to indices. So energy is beating indices, metals is beating the indices, and some grains are beating the indices. Indices, if we were to take a look, are close to the middle, and there's some on the bottom. The DAX and the Euro stocks are performing the best in comparison to the US stocks. But yeah, we're interested in the energy, the metals, and the grains. And we've taken a just a quick look. So this is agriculture. So we said again that it's energy, metals, and grains that are beating the indices. So agriculture makes up the grains, so DBA versus the ES. And if we were to do DBE, energy was one of them. We could see that it's clearly in strength. It's clearly in the strength to the upside trend, and it's the one that looks the strongest. So we could say here, commodities, energy is the strongest. We have to do a drill down on that, which will come up later. Base metals, in terms of the 6 month versus 3 month view, it doesn't look as strong in comparison. We need to see kind of a reclaim over here. So base metals looks a little weaker. Precious metals still looks weaker in comparison to the S&P 500, and also in comparison to energy. If we drill down into copper and platinum, we're at resistance. There is no clear winner here. So metals, we're not really worried about. And then agriculture on the grains, we're not really worried about in terms of its strength. So if we were to do a drill down, we need to see a drill down in energy. So we need a drill down of the drill down, which would be like natural gas, uranium, and like sweet crude, Brent crude, and gasoline, and just being able to see kind of what's doing well there. In the thematic portfolio, we would just go down here, go up here, and we could see I've already ranked from best to worst the thematic portfolios, and for the most part, I think Robot Revolution looks good. I would want to see a pullback into here, the back of this double bottom bull flag or bulldog, and the flag is currently in the stage of consolidating within the previous 6 month. We're going to have inside bars, consolidation within the previous 6 month bar. So we're waiting for that to pull back, but it does look like a really good accumulation opportunity around here once we get there. Caffeinated drinks looks really good. Swing failure pattern on the reclaim. Could see come back here into this swing low. Both of these swing lows here, and then reclaim on the close, and then head higher. For poor performance in the economy, people in the economy have to make up for it, and they have to make up for it through pain of their wallet, and then they have to work more, and they do work more. They're able to work more by taking more caffeinated drinks. Aging population. So I think pretty much Robot Revolution and caffeinated drinks are related to the aging population, and it makes sense. So this is the kind of drill down of the trends. We saw healthcare as a sector that was a possible trend, And we could see from the aging population that with the wealthiest cohort going to retirement and its cost for healthcare going up, we could see that this would trend really well, where the world's the largest, wealthiest cohort, all their money will be going to these companies. And then as far as U.S. national defense, something to protect all of the above would be the national defense. And right now we're at resistance. We're kind of bouncing off of it. But as far as like possible hedge reclaim, see swing failure pattern, a come back into here would be a nice left shoulder deviation reclaim here. We could be reclaiming here, but I would say this one looks a little more complicated in comparison to the others. If we were to just open the range here and just see where we're at, we would want to buy when we're down here on the retest of this deviation here. And if we can accumulate here, it would be really good for the movement up. But right now, this portfolio, I would say it's like an orange. But these three look really good. Robotic Revolution on the pullback, great buy. Caffeinated drinks, I think on the pullback it looks like a great buy for a reversal for strength. Aging population on the pullback, we don't know how deep this will go, but on the pullback here, great buy for a more upward movement. And then oddly enough, like as far as like energy wise, we got water sustainability. It's trending really high and like fast, so I don't trust something that's in like a moving average channel, or no, is it ascending channel, just because there's no real base, and it's only a matter of time before it comes back to form a pattern, and the the parabolic top is put in. So I don't really trust that much. Chemicals from natural gas. This one looks like it came down into support. I don't know if it's going to come down into more into support, but chemicals from natural gas looks good. Like we're holding here. As long as we continue to hold this level, when it gets weak, we'll check back within 6 months, or just a reclaim here on the 6 months. Now it would be something worth paying attention to. If we looked at a smaller time frame, like quarterly, looks like it's holding the quarterly low here, and it's trending really well. So chemicals from natural gas, like it could be a nice short-term play for continued trend continuation. Let's see, that's all. And then junk foods. These I consider, like the pattern looks weird. It's kind of just a rolling top, and trying to reclaim the highs. And I don't know. I just don't trust this kind of pattern. It looks weird, and I would like more time to go by before I get excited about it. Space economy looks very similar to the national defense. I just think they're gonna be hand in glove. 3D printing. We're at the lows. It looks like DBC or XLC communications versus the S&P 500 were just kind of drop like a rock. And I don't know. There's not enough data to really make a decision here on 3D print. Active lifestyle, looking like we're hitting resistance here. Not really exciting for active lifestyle. On AI, we haven't hit the lows here yet on this. We want to see it kind of get squashed a little bit, but kind of equal lows here on the 6 month. I would just like to see more of a deeper correction for a swing failure pattern. Autonomous driving, I don't know. I'm not really excited about this autonomous driving. I kind of want the demand to be squashed out, which could come. I think a lot of people are expecting a recession, and that may come true and may not. But if we do get a flush out, would be a nice kind of reclaim for buying. I think autonomous driving could be a really good play for the future, it just needed to get a little cheaper in comparison to the S&P 500. Big data, not quite at a point where we would get really involved yet. We need to, for a reclaim, we need to see it close above this level for big data. Blockchain, I don't know. I would say that it just stays consolidating down at the bottom here, or go lower. Cancer research, just kind of bouncing. It's not really trending. A lot of these here, like casino and online gambling, doesn't look like it's trending. It's pretty much going sideways. China internet, it's got a lot of work to do to reclaim, but right now it's trying to put in the work there for the China reopening. Just doesn't look appealing really. Now this one, cloud computing, doesn't look bad. It looks pretty good for this retest. We want to get more interested if we can get a 6 month close above this level. For right now, it looks like it's got potential. Like it could do really well, but it's not there yet. Consumer and business travel, we want to see a retest here for a nice reversal. This could be really good, but we're waiting, which deserves an orange. Cybersecurity doesn't look good. Huge spike, a lot of bears in there. This one, digital payments, looks like we kind of broke down and we're underneath. We need to see a reclaim on that. So no go for us. Not enough information there. Discount and luxury lifestyles. We need to see where we close here. Looks like it's getting some momentum. If we could break out, retest, and resume, that's kind of what we want to see. So, like, I would say this is an orange. It could be totally something that breaks down too. So that's why it's an orange. It's not like really a green light. Eating out. This double top here looks really concerning. We're kind of almost putting in like a swing failure pattern to the downside based upon the 6 month. So I'm not really excited about it, and I wanted to have more time. But this could be the point where we would want to see it if it collapses underneath here. If it collapses underneath here, it's bad. But right now, it's kind of in this weird no man's land. We need to see a reclaim of the highs. E-commerce, put a big low in there. I have no idea. There's no real trend on the data here to really make a decision. Here, we're just at the lows. I'm not excited about it from what I see. There's no real pattern, distinct pattern. Genomics, kind of a swing failure pattern here based upon this big low here. Reclaim there. But I would say if we can get over 3.41, it would look more appealing on a close on the quarter above that. If we don't see that, it's kind of weird. So I would put an orange on that. We just need to see a nice close above. This one, healthcare access and efficiency, I don't know. It doesn't look that great. This swing failure pattern here on the deviation, it's not appealing. Healthy eating, we got a nice deviation possibly forming. We need to see a reclaim and retest resumption, and but we don't see the strength yet. Home improvement, this has always been like a staple, especially in 2020. It just really took off. So, but the trend has been broken, and we're at a possible support here. So we need to see if it holds and a possible reclaim of the trend. Reclaim of the trend would be roughly here. So this is like resistance here. Other than that, in terms of the long-term trend, it doesn't look bad. But where I would be a buyer would be 6-month demand right there. 6-month demand would be a really good buy for me. Judging from the Euro-dollar futures curve and the Treasury inversions, this is something that would be a target for me to buy. I want to see blood in the streets for me to get involved. But I would say this is an orange. Like home improvement is always been a staple for growth, and we need to see people getting kind of their butt kicked before we get involved. And it's sad to say, but that's good judgment. That's kind of just how it works. In order to get a really good deal, other people, zero sum, have to lose. So we're trapping those people, but in effect, I mean, we're allowing people to get out of the trap that they're in, which is holding on to losing position and providing liquidity, providing money for people to get out. And sometimes people would prefer liquidity at a loss to get out. I mean, it's almost like you buy a business, but the business is like its own jail and trap, and you want out. Like you have all this money put in inventory, you want to liquidate, you want to get out, you don't want to work there anymore, you think the business is crap, and you just want to get out of the trap you're in. And sometimes you have to sell at a loss because you value getting out higher than the increase in the value of the business. And it's basically the same principle. Here on medical technology, in terms of the thematic portfolio, it looks decent. We need to get a close above these highs here for us to get really interested. If anything, coming into quarter, like a retest here into quarterly demand, for it to come back here, would be really useful. Even this lower part on here on this quarterly demand would be even better. We want it to hold or reclaim these areas or come into a retest here for this swing failure pattern deviation to really just be useful for us. If not, like we want to buy roughly at the 6-month demand or the one below that. But we could turn these green. But this is kind of where we would have our eye, first and second target. But roughly for a first target, it's not bad for a pullback on medical technology. Medical technology looks like it's going to do well. And these are the companies that we would be looking to support. So I would give this an orange, possible green. If we and it really rhymes well with the aging population. New car production, not really enough information there. Online gaming, not just looks like XLC versus the broad market. It's just straight down. Online music and video, not enough information. I mean, a reclaim of this level would be nice. Pet passion, looks like we're at a swing failure pattern right now. So demand destruction, we expect that to kick in. So it doesn't look good right now. We would just kind of wait. Precious metals, a nice reclaim. We kind of want to see some more retesting before we get involved. I think that's it. Like it just doesn't. This peak here does not play well. We want to see a nice deviation here. There's no real big deviation on the 6-month. It's shown as a big deviation. So a nice, like if we could buy like into here, that would be a better position. If we believed a lot in precious metals, buying when price is down here, in comparison to the S&P 500 with all these companies, mining companies or whatever, buying into here would be the best. That's kind of what I would say. Like if you're a long view, you're bullish on metals, that's where I would buy. Pursuing beauty, I don't know. That's not nice, speed gap or fill gap. We don't know. Not enough information. Renewable energy, this was big back in the day. I don't know, like there's a ascending channel here, looks like, but I'm just not really excited about it. Resistance up here, kind of cheap right now, but I would want to see a swing failure pattern before getting involved, or at least a new low here. Right now we got the support. We're kind of in the middle between this resistance and the support, so I'm just not really excited it's like in the middle. No one buys stuff in the middle. You buy it when it's really cheap or when it's not. Um, so that one just booted me on the social networking. I don't know why, but I need to replace that formula. So we have to skip it. I think it's because Twitter got bought, and we can't do that. And then there's something wrong here for software as a service. This 5G era, not looking bad. We kind of need more information. I mean, it would be a nice um, stagflation play, but we're just kind of we don't have enough information here. I put it as green. I don't know why. Maybe because of this 6 month bar. I don't know. It's not enough information, right? And then housing looks like we're at resistance. We're in this no man's land of support and resistance on the reclaim, and we kind of need to wait it out. We got this huge deviation here, possible breakout reclaim. We need to see it flush out. It's just not enough information that we could use, and we had a nice 6 month close. So technically, we need to wait another 6 months to see if housing is a good play. Millennials, we got booted from that one, so it must have been something that delisted. Um, so I think that's pretty much it from the. We got wearable tech and workforce diversity leaders. I could just tell you right now they're not that great, but from as a conclusion, for the ones that look decent, that we want to see kind of a retest in, the robot revolution. Another one would be the aging population. Caffeinated drinks. And you could find the stocks of these companies inside a Charles Schwab Thematic Portfolio. Caffeinated drinks, chemicals from natural gas, kind of like a very short-term play portfolio. And chemicals from natural gas, things that are used in that is like fertilizer, and then natural gas, like energy. So a lot of commodities here at play. And then, of course, all these require a retest, and then medical technology doesn't look that bad. So that's something that I kind of like. Let me take another look at that chart. Yeah, a nice retest in here would be a nice swing failure pattern to gain some strength, cup and handle style, for a long-term portfolio. I think it looks really healthy. And if I were to build my portfolio off of two themes, revolution and medical technology, sounds great. That's kind of just, or aging population could be a phasing out kind of theme portfolio. But I like robot revolution and medical technology. I think those would be great together if you're to combine two themes for a portfolio. So in conclusion, commodities, energy is the strongest in terms of this quarter. In the drill down, so in terms of the commodity drill down, we drilled down and found that energies, metals, and grains are doing well. But out of the three, energy is doing the best. We did not do a drill down in energy. We could, but down the road maybe. Natural gas looking like it's doing well, but in terms of like sour crude versus sweet crude, we did not make a distinction. Robot revolution looks like it's a good portfolio on the pullback. Would be a nice area to buy. The same for aging population and caffeinated drinks, chemicals from natural gas and medical technology. If I were to make my own portfolio, I would do one based on robot revolution and medical technology. And these portfolios, thematic portfolios, are found on Charles Schwab's website. It has up to like 25 stocks, and you could pick the ones you like the most. So that's the conclusion of this part 2 drill down.